Everyone, and welcome back to the currency game. So I wanted to go over a couple of the trades that were made for last week, and we're going to also put those numbers into the 100K challenge and see where we are. It doesn't mean that, because I have started paying myself, but I'm just showing if you're not even paying yourself, where would you be if you never take the money out, so you can see the power of compound interest. But and we're gonna kind of go through this trade. I want to go over one more because in the last video I was talking about this particular support level, and I have changed my background for my chart and see if this do I see any improvements. And I have noticed improvements with changing the look of my chart, and it actually makes me feel better too. So trading is highly mental and emotional type of profession. So the more you can do things to help your emotional and mental state, the better trader you're actually going to be, believe it or not. So changing colors, whatever colors that kind of draw you in, or that kind of helps you with your discipline, whatever it is going to help you with your discipline, keep you on your strategy that has been back tested, that you feel that is working for you, or not that you feel, but the data shows that it's working for you, you're profitable. So this has been working for me. Not that the other chart didn't, but I have noticed an improvement. I'm getting better entries, better timing of my entries, and it's helping me to not focus on the chart as much. So I can take a quick glance at it, and I usually can see where I want to be, and where the chart is going, even from the lower and higher time frames. So let's go into the first one that happened earlier this week, and it was because and I also have been using the 2-minute for entries as well. So, but right now we're looking at the 5-minute. Let me go to the 2 minutes so you can see what I'm talking about. So I had already put this right here, this green support, as a support, and this is the way I do it for those who are new to how I find support areas. So where are we at? Right here. So this came from this green candle right here. This candle right here. And I think I might have even drawn it. Yeah. So it came from that candle right here. This gray candle right here. I didn't take the wicks. I just took the body of it. You can take the wicks. Sometimes I do. Depends on, now I've just gotten to a point where I've done this so much with doing support and resistance off of candlesticks, like at the lowest point, or where it is where it was the lowest before it made the run, and I kind of base it off of that. So but that's where this is support is coming from. It's coming from my left, from the feathers, the nearest point, nearest area of candlesticks to my left. All right, so that's where that support is coming from. And so as it got closer to that area, I started putting it on the 2-minute. I was also doing alerts as it was happening. The other thing is because we were in a downward trend, I was trying to see if we can make it past this last peak that it had made on its way down. So like it was on its way down, it bounced right here and then came up, but it didn't break this peak. So it came back down, made a bounce, came back down. And this is where I enter in. But I was using this last peak as my resistance because I didn't know if this was really where we were going to like make a headway. And the reason why I didn't really know for sure because we weren't close to this bottom resistance, support. Let me show you what I'm talking about. Parallel. Okay, so the trade is up here. My parallel trend line is down here. We weren't touching it in any form or fashion, so I didn't really know for sure if we were really going to bounce. And that bounce that you saw was on the 2 minute, not on the higher time frame. So that's where I decided that, hey, I'm gonna use this as my resistance, and I'm gonna come out here and see what it does after it hits this resistance. And then if it were to go up and bounce off of this resistance and make its way back up, then I'll get back in. So it didn't do that. So I basically, like I said, used this as the resistance for the first pass. And it was a small trade. It was 3.28%, but hey, we'll take every we don't dismiss the small ones because 3% can be really good on a nice size account. Even a smaller account. It's like if you're still compounding your money. That is all I care about, is that I'm compounding the money. So the second one was based off of this support area, which I had got also from the left side. So if I go to the hourly chart, I think I was actually using so I used this gray candle right here. So it was the last, and I didn't go all the way up. I should have went all the way up. But I was using this gray candle right here. It was the last candle to drop, right? Before it started going back up to my left of where we are, right? So if I were to go scroll all the way to the left, these are the candlesticks. And that was the lowest point. So that's how I got that support. And if you notice, like this little green line that's in between that support is basically because I checked middle line, and I use that sometimes as a guide. And how I use it sometimes is when I'm prepping or preparing for a trade, way before it gets there, I'll do this to see if I'm under 2%. If I were to go ahead and put in a limit order, I might do like a little bit above there and then see if I'm still under 2%, and I might go ahead and put in a limit order. If it's above 2%, then I typically will not put in a limit order. I'll wait for it to get to that area. This time I actually still did not put in the limit order because I was curious if it was going to drop all the way down to this next one, since it's still inside of this parallel trend line. So that's why I didn't. I could have, but I didn't. So I basically used the 2 minute to decide where to enter. So it dropped, it kept dropping, and I saw a really bullish candlestick, and I put it right above the next one, and then I put a limit order right above when it had that bullish one, then it had the little gray one. I put a limit order right above that one. So by the time it finished, it took that one when it crossed that blue line, which is my limit order, which was at 0.000161. And then I set my target. Now, first, I've always try to see what it does at the 50% level. It was going right past it, bounced on it. So I stayed in. I still kept my stop loss down here. And then it, it still went up, came back down. I was staying in there because just to see what happens and let it retrace back. And then I know that I was this is when I started using my trend line, parallel trend line, to see, as long as we don't go below there, then we're good. So we were staying above there. So I wanted this to be my resistance area. Is close to the 161% from down here, and it's close to this upper trend line. It probably can make it up to this 50%. I probably could have waited for more, but I just went ahead and took the 20%. I was good with it. I made my compound interest, and that was it. And I got out because I knew that there might be some other opportunities on other charts, and that's what I want to go over next. And that's on Swift. So I'm kind of watching this one. It has already made somewhat of a run from down here where the support area, and it's bounced off of here. So what I'm trying to see is if Swift, because it's been in this trend right here, I'm waiting for it to come out of here, see if it can come out of here and make a bounce, and then I want to get in. Because the reason why is because when it has done this before, I want to see if it can do it again. Can it, make these downward trends and then spike up? So I'm wondering if it can make this trend down and then spike up to at least to this 50% area. And I want to see if I can catch that. So that's why I was okay with coming out of the other one for bunk. And if I see that I can get back in at a good spot, at a good demand, and have enough room for profit, and not just room for profit, remember always that I have a good stop loss of 2% and nothing less than that, then I will decide whether if I want to go back into that one. But I'm more interested in this one for right now, to see if it's going to come out of, I want to see if it's going to first bounce. Let me show you what I'm talking about. I first want to see what kind of bounce it makes when it hits this 50% area, and then what does it do when it comes back, hits it and come back down. If it hits it and comes back down and makes its way up past here, then I probably will try to go ahead, and if it bounces in here in this green area, I'll probably go ahead and go in. Because worst case scenario, like if it hits up here and comes back and don't fall through here, or if it just comes and liquidates this little area right here. Let me see what my So I'm always going to try to see if I can get less than 2% loss. Like if I could get it, if it were to make a bounce to here, and I can get it like somewhere like in here of that green area of support, once it goes up and then comes back down, if it were to do that, then I will get in, leave that stop loss down there, let it do its little bounce around thing, and see if what I can get to at least up to here, and I will be great with that. If I can get it to do that, and if it can, I might even do layering. And what I mean by layering, I might do like come out of here, right here, leave some money in there, come out again. If it were to keep going to up here, leave some money in there, and then see if it can go up to here. Maybe just leave a little bit to come out of here to here. If not, then that's fine. I'll be okay with like taking, if it can't go past there, then past this 50% area, then I'll just take it all out. So that is the game plan for the next potential trade. So that's why I'm okay with coming out of bunk, because I want to be ready for if this thing were to take off or not. But that is okay. So let's go to the spreadsheet. All right, so we're on the spreadsheet. So this is based off of starting with $121 or $100, whatever. And then not taking any money out, and you just kept compounding it. Where would you be at today based off the trades that we've made since the beginning of the year? So the Sunday trade was worth 3%. It was that small trade, which at this point would have been a nice little paycheck, would have been worth over $1,000 just for that small trade. And then on Monday, came back in with bunk. Both trades were with bunk. The second one being the 20% yesterday, and that would have been worth that, based off of where we are, is worth at 20% of the 35,000 would have been $7,000, right? So the other thing I want to say about this, because you see a lot of videos where people are talking about, oh, I made, I don't know, $2,000 today in 15 minutes or whatever, 30 minutes or whatever, $5,000. But remember what you also have to take into consideration what they have in that trading account. How much money do they have in that trading account? You also have to take in consideration, are they using margin, when they're making these trades? And so it sounds great, and they're definitely, if they made the trade, they're making great money. But remember how much money has to be in there for them to make the money if they're not using margin. And what I mean by margin is where basically you make the trade. Let's say you have $100, use margin. Let's say you got 5x margin. So that means that when you make the trade, it's as if you have, instead of $100, you have $500. And then off of that $500, you make 20% of 500, which would be what, $50 or whatever. But let's say you got more money. Like I heard one young lady, she was talking about, because she does margin trading, and she does shorts or whatever. And I mean, not just shorts, because you can do margin trading on longs as well, but it's almost necessary to do margins on shorts because of you having to do shorts is not spot trading. So, but anyway, she blew the whole $7,000, and I understand that she's saying that was her way of learning, but that's a good thing about the way I trade, that I feel like you don't have to blow a whole big amount of money to learn. You can blow $20 here, $20 there, right? And learn slowly and still be making money, because like you could basically, if you use the rules that like I'm using, like if you start with $40 and you have a 2% risk, when you lose a trade, you only losing 2% of $40, which is like nothing. So like if I were to put, I'm gonna take it out, like I'm gonna put $40 here, and excuse me, $40 and negative 0.02, I would have lost 80 cents. Okay, I can keep going because now I can try again with $39.20 minus a little fee and lose again. Negative 0.02. Boom. I lost 78 cents. I still got $38 to keep trying. And I can then say, oh my God, I get it now. Or maybe it took me, let's say it took me 10 times. Okay. To get it wrong, I still have most of the $40. I'm down to a little over half of the money, and I failed 10 times. And say, let's say I get it right on the 11th time with 5%. I gain $1 back. Then let's say I got lucky and got a 20% like I did on Monday. Or let's say 10%. And I kept doing the weekly trades. Even though I started with 40, I didn't even blow the account. And I failed 10 times. This is what I mean, like, but that's the difference in someone who's actually learning how to trade and someone who is gambling. That is the difference. The person who's gambling is looking for that lucky break, and they might not get it. They just might blow it before they ever get it. Versus the person who's learning how to trade will start with, they don't care what the amount that they're making, because they're starting with something very small, something that like $40, $20. And they're trying to figure out their strategy. That's what they're focused on. It's on their strategy, because they know once I figure out my strategy and I'm winning with that strategy, now I can bump up the amount that I put in with that strategy, right? Because now I can have $42,000 with that same strategy. And I know as long as there's liquidity in that particular coin or stock or whatever, I'm gonna win because I got a winning strategy of proving it to myself, and I didn't have to blow everything while I was learning. That's the difference. So, and then if I keep, and that's why I even like starting with something very small and use compound trading, where basically compound trading, where you're basically just flipping the money, and you don't take it out until you are at an account size that you can start paying yourself and keep that amount in there. So whether that account size is 5,000, 10,000, 30,000, whatever the amount that you feel like, okay, now I'm ready to pay myself. And what would make you ready? Like, this is how I base where the account size is, because I look at, this is how I judge it. I didn't put that back. My lowest trade is around about 3 to 4%. And if my lowest trade can it give me, let's say I only make one trade that week, and it can give me 1356, that might be a point where I'm like, I'm good with that. Because if I can keep if I can only make one trade, one little trade, and make $1,300, that's the account size I want. And I might not want to go any higher than that. I might, from that point on, I might, every time I make profit, I might take it, all my profit out, and keep the account size at 29,000. That's how I figure that out. Now, for someone else, it might be something different. They're like, well, when I was down here at, so you see, like, you look at these trades that we made this year, like, most of them have been over 4%, but I use that to be very conservative. But, like, that's how I decide. So it's the slower way, but it's also the faster way. Because it's the faster way to learn, and the faster way to learn is always going to be the faster way to make money. Because if you're just gambling, you're not really learning. You're just taking chances. You're still taking chances, but you're taking, like, when you're learning, you're taking more strategic chances, which gives you a higher probability of winning, especially if that strategy is based off of what has worked. When you go back, and that's the good thing about a chart, you can go back in time and see, did that work before? Would that have worked before? And before that, and before that. And then you see your probability of wins. Period. So, well, that would do it for today. Thanks, guys. And let me know if you have any questions or comments in the and hit like if you got something out of this. I really appreciate it. That lets me know if what I'm saying makes sense. All right. Thanks. Bye-bye.